Hello, Warriors. Let's have a great week. This is Dale Pinkert with TradeGATEHub, aka Coach. So let's talk about what's going on. Quite a dramatic week. December is the new October. Normally, what we're seeing in markets happen in October was delayed for when people want to call it a year and book square and get ready for January. You can't do it. The market's not going to let you go. We have a lot of interesting action happening during December, even though it's a chopped up month. You know, the last couple of weeks of December are partial weeks with Christmas and New Year's. So let's see what we could accomplish this week with a full week of trading. As you know, I've been pretty negative the silver market for a long while, especially after we negated this head and shoulders breakout up here. Was negative the gold as well when the gold negated its breakout up here at 1829, and gold's holding up a little better than silver. I am looking for something a little counter trend here in the silver. We bottomed right around this 22 area, and I think there's a possibility we could make some type of counter trend move up to this level, maybe around 23 and a half. So I started to scale today. I'm down about 11 cents on the trade right now. I have stops underneath this low, but well underneath this low by about 20 cents, just in case it turns out to be a three driver. Here's one, here's two. And if we had another low to take out Friday's low, I think it's going to diverge here, and what I would probably try it at new lows, but it doesn't have to get to new lows. So I put a piece on and see what happens tomorrow for turnaround Tuesday. And gold's holding up much better than silver, as you can see. When you look at something short term like the 15-minute chart, you could see that the rate of descent is much slower than silver. Silver's given back more. That's probably close to a 61.8% retracement. So along with looking for something in silver above the 23 handle in the next week or so, I'm looking at what's happening here in the yen. And, you know, called it out at 1250 last week here on the video. And there's been plenty of times to doubt this call from down here. And, you know, if you didn't take partial profits on a 100 pip rally. So this is the third time down here. This was Friday's last candle. And so, you know, here we are this week starting off to the upside. It wouldn't shock me if they went for stops under 12 and a half and then tried to turn it. But the yen is not looking as constructive as it needs to recapture 1350. When I look at it daily, it definitely this action right here on the daily, it did not confirm, but on the 4-hour, you know, there is a possibility for one more shot up in the yen. A lot of it could be with what happens in yields. I will admit that yields softened up more than I thought they would last week. Yields are up a little bit today, but it's possible that this is just an ABC correction after this advance, and yields start heading up again and head towards that 2% level. It really has to dig in its heels. As you can see, I had this blue pivot line, support line drawn for quite some time. So pay attention to the yen on any kind of stop hunt if we get down there. And also yields. I still don't think yields are going to take out these lows, and still think this double top will give way. And now you just do an arithmetic count from 134 to 170 is 36 bips. So 36 bips over 170 or 168 is going to give you a little over 2% on the 10-year. So we'll see in a couple of weeks. I have a lot of major turning points coming up around the Fed, which is the week of Christmas. Also, I'm a believer in paying attention to the change of seasons, and the beginning of winter is in that time frame, the winter solstice. So I'm thinking that there could be some important trend changes. One I think that I'd like to see complete already would be the dollar. You know, that since this level held, I've been talking 97.50 to 98 on the Dixie. Would like to see the Dixie complete going into next year, up around that 97.5 to 98, which I think could drive the euro back down towards 111, 112. There are a lot of people thinking that the euro bottomed last week. I'm not in agreement with it. The RSI reading on the daily wasn't that great. There was some divergence down here, but it was under the 20 level. So I'm looking for this flush to complete under these lows, and it's possibly as low as 110.5 or so in the coming weeks, which I believe is going to be a long-term buying opportunity in the euro down there early next year, and a major shorting opportunity in the dollar next year after a new high towards 97.5, 98. And that's when I would become a little bit more longer term constructive in precious metals, because I do believe what it's going to take to have a bull move in precious metals is going to be a bear market in the dollar. And when you look at the dollar here, you know, it looks great on the daily, but if you break out your telescope, what we could have is the whole year of 2021, which is rapidly drawing to a close, could have just corrected this decline in the dollar that this high was at the COVID bottom. And, you know, when the S&Ps after the crash and with the recovery in the market, the dollar sold off as well into the end of last year. You know, strong dollar hasn't hurt the market. I mean, you look at the market for 2021, and when I talk about the market, I'm really talking about the S&Ps. So from 2021, with a strong dollar, we had an overthrow and a, you know, continuation of a melt up or uptrend with very few sell-offs, especially since last October, November, where we had the lows and we're at new highs. But you know, I still believe that the S&Ps could be in trouble. What I'm looking for is a retrace. I believe this may have completed the first wave down in the S&Ps, and everyone thinks that new highs into early January, even the bears are saying there'll be a better short after we make a new high, and that could end up being the hook. Maybe we don't make a new high in the next week or so. If we had a rally back to the 61.8 level, around 46.50-ish, right in there, I would look to sell that rally. So if we get any pre-Santa Claus rally in the next week or so, or maybe the Fed generates it, I don't think we're done. So this was 200, call it 250 handle decline from the high of 47.40. So if I'm looking for 1.618 of that, that would be about 400 handles from 46.30. And that's going to take you down to the 4,200 level right here. This very important low that we had in October. Also moving averages coming in at that level too. 42.44 is where we have the 50. 42.44 is correct. So that would be the next stop. And then if we take that out, you know, we're talking sub 4,000. We'd be back in, just to give you the picture, just to give you the whole picture. If you look at the weekly, that is a weekly. You look at the weekly, we could head down towards, I'm actually looking for 3,300. So write that number down. I think we get there sometime in the spring, and that's not going to be a great winter for the market. And it's a contrarian call. Most people would say we could have a 10% sell-off. That's more like 25, 30. And I know that some people have counts all the way down here at 26.80. So we're going to enter a period, I think, where we're going to have a lot of risk off. And I think what's going to surprise people is, you know, a lot of people have been trained that when we're having risk off in the market and stress in the market, that the dollar becomes the haven and that people will come into the dollar for safety. And I think it's going to be the opposite, yet to be proven. But the way things are setting up, I think we could have a pretty good bear market in the dollar. And the dollar actually declined during this sell-off in S&Ps and have the dollar not be safe haven status, but actually a flow out of dollar denominated assets. People will be looking for markets outside the US. I think of a falling dollar of who that would help. It would help multinationals here in the US, but probably could really help economies and bourses that have been pressured by a strong dollar. Makes me think of emerging markets, which people that use the milkshake theory and are looking for a huge blow off to the upside in the dollar because their debt is denominated in dollars. That's going to cause such a demand for dollars. I would think emerging markets would have a chance for some good upside with the relief of a strong dollar. When I was talking to Tavi Costa last Thursday, he brought up Brazil as his home country. So people are going to be looking at the ignored markets that have been underperforming. And a major part of its underperformance has been this dollar rally that we've had throughout 2021 that may be drawing to a close and a conclusion. So, it's one day at a time, one step at a time. So we'll see what happens there. God, it seems like it was a year ago, but it really wasn't a year ago when I started talking about a top in crude up here around 84, 85. What a nice break. And if you recall, oil normally leads, and oil had its first break well before this S&P high on Thanksgiving. So we really didn't top until the week of Thanksgiving, and this crude top was a month before. So there's a little bit of a lesson to follow the action in crude. Maybe crude will be the first to bottom if it was the first to top, but I even think there could be some type of recovery here in the crude oil market back towards 70-ish, maybe 75, but it's looking pretty heavy. 57 could be next. We do just have a two driver here. So, there's an outside chance that we could make one more new high, but this was pretty, what I would say, impulsive. And I'd more be looking for a right shoulder. The left shoulder here in crude comes in around 77. So, and this moving average is around 76. So that would be a pretty good rally in the crude market, should that happen. Let's see, NASDAQ underperforming S&Ps, down almost 100 points today. We have a really weak action. A 61% correction in the NASDAQ would take us back to about 16.1, 16.2. That would be a sell to me. I think one of the only hopes that NASDAQ has would be if Apple could regather itself. What's it doing here today? And Apple is strong. Okay, so here comes Apple with potentially one of my favorite formations, which would be a 3 drive right. Here's your drive 1. Here's drive 2. And we could be setting up for a drive 3 over 170, maybe 175. And then if the strength rolls over, this is one of the supportive elements in NASDAQ. And, when's the last time you saw NASDAQ down 100 and Apple's still up $4? So it's definitely been resilient during this first sell-off. It took a little bit of a hit after earnings and pulled back from 69. I think we could get one more high in the next several trading sessions. And, you're taught to short the relative weakness, but I'll be considering put positions in Apple on a 3rd drive to a top formation. Looking at Russell, really pretty weak, huge gap. If Russell rallies, I'm not looking for new highs on this cycle for Russell anymore. I think it was really a very negative thing for it to have, this type of breakout, I don't care where you draw the line, but, even if you draw it here, just a rectangle, you had a false breakout 2 weeks later, not a real bullish sign for the Russell. So you have some gaps in here that it could attempt to fill. I'd sell rallies in Russell as well. Back to 227, 230. See what else I want to cover here going into tomorrow. I'll be with Mike. So Canada, it's still grinding higher, a little pullback from 78.6. But we'll see what happens to silver and gold in the next few days. Silver looks like it wants to wash one more time. I'm going to try it again down there. See if we get a 3 drive there in the next day or so. And the S&Ps are the strength, but basically we're set up for recoveries from what happened last week down. Now looking for recovery in S&Ps, silver down, but looking for recovery, whether we, touch this low one more time or hold it, one more rally there, and a recovery in oil as well, and still constructed the dollar until we get to 97.5, 98. Any questions from anyone here? Brooke? Anyone? Okay, so that's going to be a wrap. Trade carefully in the month of December. Just like I say, don't try and make your week on a Friday. Don't try and make your year in December. It's a good time to evaluate what you've done and get ready for a new year. Only a couple of full weeks left of trading before the holidays kick in. So reduce your size. And you know what? There's nothing wrong with taking some time off, either recharging your battery and getting ready for it, and just taking larger time frame type positions that you think are going to work into next year. So if you don't think, if it's like the S&Ps selling rallies up here, I'll do that here in December. A lot of people are expecting a Santa Claus rally, and it may be a holiday with coal, but this is something I do have my eye on, that a lot of people are going to say this is a 5% sell-off, now we're going to new highs, and I think that might be a hook. Is the key is going to be, can we rally? And when we do rally, can we rally to new highs, or is this a failing rally? Right now my bias is for a failing rally in S&Ps, new highs in the dollar, bear market rally in silver, because I don't believe the real low in silver comes until we're down here around $20. Okay, but we could have one nice little bounce before that occurs. But this is where the long-term buy in silver is something I'm looking for, down around the $20 level. So you could always join us here in our main chat. That's where we post a lot of our ideas, Michael and I. And I hope that this is adding value to what you're trying to accomplish as a trader. So the theme is, once again, theme is rebounds in markets that got hit hard last week, but only temporary counter trend trades. The directions that we had last week in most of these markets, I expect to hold for the medium term. And that's going to be a wrap. Remember, don't just count your pips, count your blessings. Come and join us and be part of our mastermind. I have a great guest lined up on Thursday. I'm not going to tell you who it is. You'll have to tune in. But really, you're going to see some long-term work that's going to shock you. And that's a wrap. Stay tuned for Michael Venezia is on today in an hour and 13 minutes. And I thank you for your attention. And our mission is to build up and edify traders every day. Good hunting the rest of the day. And Michael and I will see you tomorrow. Mike will be on solo in an hour and 13 minutes. Don't just count your pips, count your blessings. I think I said that, but you can never say that too much. And I want to wish everyone a happy holiday. the whole TradeGATEHub team, TradeView team. It's been a little over a year since I've been with this community, and I've made some good friends, and I've seen a lot of talent within the organization, trading talent, and there's no downside in following what people are putting out there to both teach you and give you some actionable ideas. Adios, everyone. See you tomorrow. Hi-ho silver. It's coming back. Last 20. Here it is. So far, holding Friday's lows. Starting to get a little pin bar here. New lows will not bother me. I'll buy more tomorrow. See you guys then.